Right, good morning, everyone, as we are just in the European trade on Tuesday, the 4th of February. Now, we'll have a look across markets and see what's going on, what's up, what's down, on a pretty, I would say, interesting start to the week with tariffs coming in from Donald Trump over the weekend and then them being backtracked on. So, 25% tariffs on anything imported from Canada, anything imported from Mexico, and then 10% tariffs on anything imported from China. Now, Canada did hit back with threats for legal action to be taken on America and retaliatory tariffs. They have since backtracked on that. Mexico kind of backtracked to begin with, said that they were gonna put 10,000 more troops on the border in order to be able to deal with drugs and immigration, which are Donald Trump's two main things coming in from Mexico. Canada have done the same thing. They didn't give numbers, Canada, but they had a phone call last night, Trudeau and Trump. Kind of worked on their disagreements, I think, and then Canada have now gone and said that they're going to reinforce the border and try and work on that rather than actually retaliate. China does retaliate though. It's back on tariffs with kind of strange things. I mean, things like agriculture and stuff, but which is a bit. A couple of things don't really make too much of a difference, but I think it matters more from US handing out tariffs than it does retaliatory tariffs coming back the other way. I mean, the US economy, the way it's gone over the last kind of 20, 30, 40 years, into an economy that's got a massive trade deficit. So it's got a big trade deficit. So what it means by a trade deficit is that it imports more than it exports. So when things go back the opposite direction, or when the tariffs go back the opposite direction, it doesn't really affect it too much as it is when the US place it on Canada or Mexico on goods imported from those countries. So tariffs were not avoided over the weekend, but now that it's the Tuesday, tariffs have pretty much been avoided. Interesting to see what China do. China seemingly open for discussions, maybe re-sign the agreement that they signed back in 2020 during Trump's first term, in order to buy more stuff from the US and increase trade between them rather than deal with tariffs. So what you don't really want is a tip for that trade war or trade disagreement, we'll call it, between the US and China. Right, you probably want himself and Xi Jinping to maybe sit down, get on a phone call and work out their issues. But that's really where we're at in terms of markets. I mean, really the only thing you can read about at this point in time is tariffs, and they've been placed, and they have also been reversed for most things. You can see your Aussie, I mean, you can see US dollar across the board, gapped higher across the board, and that has since been reversed with the backtrack on the tariffs. You then get then get stocks which have reversed the losses from the gaps over the weekend. You can see they all gapped. Russell, that's a pricing thing, but that big red candlestick is a gap on the Russell too. Bond yields, not really sure where they want to go, kind of grinding their way higher, kind of back end of yesterday and into a bit this morning. Wouldn't surprise me if bond yields did decide to make their way higher. Reason being, I mean, if tariffs continue to be a thing, tariffs are likely to be inflationary, certainly domestically within the US, because the price of things are likely to go up, because either consumers have to eat the 25% extra cost to bring these goods into the country, or things are going to have to be got from America, and the reason why they're not got from America already is due to the fact it's cheaper somewhere else. So be interesting to see how that materializes. Gold has just been trending higher. I think gold continues to be an option. Oil lower yesterday. OPEC coming out and saying that they are going to slowly increase oil production. Higher supply of something dilutes the price of it and should theoretically send the price lower. Couple that with the fact that Donald Trump wants lower oil prices. I think lower oil prices probably would make a bit of sense. There was a bit of growth scares back kind of last week with those GDP prints, but ultimately look at this manufacturing PMI from yesterday. It actually wasn't too bad. It was expected below 50. Came in at 50.9. So decent figures there from the United States. Europe's not really the same situation, all below 50 as you can see across there. So, but the US, trucking along. Economic data in the US from the S&P's calculation, and then also the ISM calculation is not too bad. The manufacturing employment up at 50.3, so that's not too bad. You do have job openings today out of the US at 3 o'clock. Nothing between now and then, so relatively quiet. quiet day on the economic calendar. But yeah, that's expected to come in at 8 million. Not really the highest impact of high impact data, but markets will look at it when it comes to 3 o'clock. But we do have NFP on Friday, which will give us a better idea of where the jobs market is headed. Bank of England on Thursday as well, which we'll talk about when it gets to it. But yeah, it's kind of what's going on in the markets, what's up, what's down. Where do you take assets is the next question. I mean, I still stick to the script of being long US dollars. I still think it makes sense. You've got interest rates higher in the US than you do the rest of these countries. You've got the US not cutting interest rates while the rest of these are cutting. I mean, you look at the RBA likely to cut soon. The RB&Z are cutting. The ECB are cutting. Cable. The Bank of England are cutting. Then you come to the Bank of England on Thursday, expected to cut interest rates again. Will probably signal further cuts to come, you would imagine. The Bank of Japan, you can rule the Bank of Japan. You rule dollar yen out of this one, a little bit more of a tricky one. The S&B have got interest rates down to 0.5 or 0.75%, definitely down to 0 point something anyway, and looks like they want to get it back to negative interest rates where they were before they started raising them. The Bank of Canada continuously cutting interest rates. So you got 1, you got 2, 3, 4, 5 and 6 central banks cutting interest rates. You got 2 central banks that are not cutting interest rates. So if you do the mathematics on that, buying the Japanese yen and buying the US dollar against the other 6 of these probably makes sense. Probably difficult to be long stocks, I think, this week. They will take a bit of respite from the tariffs not panning out as, I say not as anticipated, probably is as anticipated. I think the Mexicans and the Canadians tried to call Donald Trump's bluff, didn't work. Now they're kind of backtracking on the initial issues. So that offers a bit of support to stock indexes, but that China thing probably isn't too good with retaliatory tariffs. So as long as the news sources are kind of aggressively talking about tariffs, I think being long equity markets is probably somewhat of a difficult trade. Long gold makes sense. I know it's quoted against the US dollar, but it is in a clear technical uptrend. A bit of a flag if you're that way inclined on that at this point in time. But like with gold being a bit of a hedge against inflation, also a bit of safe haven appeal if equity markets struggle to gain much of a footing. I think gold longs probably make sense as well. Oil lower. Trump wants lower oil prices. Wants to drill more oil. OPEC increasing oil production into a global economy that's really needed. So would make sense for oil to go lower. So I think long US dollars, probably long gold and short. Long US dollars, long the Japanese yen, short long gold and short oil probably makes sense. It doesn't mean go and jump on every chart and click buy and sell, but see what you can find if your technicals line up. Bond yields would be an interesting one to watch, especially if they decide to make a move higher. They will be in focus from a good amount of market participants, and if they do push higher, likely to lend further support to the US dollar. So that's kind of where we're looking at this point in time. Yeah, I'll update further as we go on through the week, but best of luck out there. Have a good trading day, and I'll speak to you again tomorrow.